Crypto has revolutionized finance, but with innovation comes risk. The decentralized nature of blockchain means fewer safety nets, making it essential for users to understand the risks and how to avoid them. This guide will empower you to recognize scams and implement protective practices to keep your assets secure. Establish a habit of reviewing security updates from trusted sources. Use platforms like CoinDesk or Cointelegraph to stay informed on new threats and tools for protecting your assets. Phishing scams aim to trick users into giving up their login details or private information. These attacks range from fake emails that look like they're from trusted crypto platforms to impersonation accounts on social media offering support. The key to phishing is deception, relying on convincing users to take hasty actions that compromise their security.
Types of phishing scams include email phishing, which involves fake emails mimicking exchanges like Binance or Coinbase that direct users to a fraudulent login page. Social media phishing involves impersonator accounts that appear on Twitter or Discord, offering technical support, but really just collecting private info. Website spoofing involves fake websites mimicking genuine platforms, sometimes with only slight differences in the URL.
An example of a phishing scam might be a scam email claiming your account is at risk and asking you to log in to secure it. The link redirects to a fake site where scammers can capture your credentials. Double-check URLs before logging in, especially if accessed from emails or messages. Bookmark official sites and access them exclusively from these saved links. Initial coin offerings, or ICOs, were once popular as fundraising events for crypto projects, but scammers now use them to lure investors into promising projects that suddenly disappear. Rug pulls happen when developers hyper-token, attract funds, and then vanish, leaving investors with worthless assets.
Signs of fake ICOs and rug pulls include anonymous teams, where there's a lack of transparency in the project team or the use of pseudonyms. Vague white papers that have minimal technical details, vague promises, and no clear roadmap. Excessive hype, where there are over-promising high returns without solid plans or partnerships.
An example is the Squid Game token scam, which involved an anonymous team that created hype and then performed a rug pull, leaving investors with significant losses. Look for projects with verifiable team members and partners. Conduct thorough research on their backgrounds and don't invest solely based on influencers or social media hype. In Ponzi and MLM scams, early investors are paid with funds from new investors, giving the illusion of high returns. These scams often rely on promises of guaranteed returns, leading users to recruit friends or family. Ponzi schemes inevitably collapse when there are no new investors, causing losses for everyone involved except the top organizers.
Signs of Ponzi and MLM schemes include guaranteed returns, which are promises of consistent daily or weekly returns. Recruitment pressure, where there's encouragement to bring in new members as a primary way of earning. Focus on joining fees, where profits come more from sign-up fees than from any real investment returns.
An example is the Plus token Ponzi scheme in 2020, which defrauded investors of billions by promising unrealistically high returns and encouraging recruitment. Be cautious of any investment opportunity that emphasizes recruiting others. Legitimate crypto investments involve risks, and no project can guarantee returns without real business or technology backing it. Pump and dump schemes manipulate the value of a token through social media hype, often involving anonymous influencers or bots. Scammers buy a large quantity of the token, create a buzz to inflate its value, and then sell off their holdings when the price peaks, leaving unsuspecting investors with devalued tokens.
Identifying pump and dump schemes can be tricky, but there are some telltale signs to watch out for.
Sudden price spikes are a major red flag. If you see tokens with sudden drastic price increases without a clear reason, be cautious.
Also, pay attention to social media buzz. If you notice the promotion of unknown or obscure tokens by anonymous accounts or influencers, it's best to be skeptical.
Low market cap tokens are another common target. Smaller, lesser-known tokens are easier to manipulate and are frequent targets for these schemes.
For example, Telegram or Twitter groups sometimes promote obscure tokens, encouraging followers to get in early. As the price surges, scammers exit, crashing the price.
A practical tip to avoid falling for these schemes is to avoid tokens being heavily hyped without substantial documentation or real-world use cases. Genuine tokens typically have gradual growth and can be researched for legitimacy.
Impersonation scams involve fraudsters pretending to be well-known personalities or brands.
They target victims by establishing fake support channels, often on social media, to gain access to user wallets or personal details.
These scams are especially prevalent on Twitter, Discord, and Telegram, where scammers exploit community trust.
Tactics of impersonation scams include
Fake customer support accounts. Scammers pose as support staff, asking users for their private keys.
impersonating influencers, fake accounts that mimic popular crypto influencers or celebrities.
Fake official announcements. Posting fake news or announcements to lure users into scams.
For example, a fake account might impersonate a popular crypto figure claiming to offer a giveaway that requires users to verify their wallet, giving scammers full access.
Practical tip: verify social media profiles by looking for official checkmarks or cross-referencing with known profiles. Never send private keys or personal information via direct messages, as no legitimate support team will ask for it.
Chapter 6. Fake Wallets and Exchanges. Entrapment disguised as convenience. Fake wallets and exchanges often look convincing, but their purpose is to capture user data or steal funds once deposited. Scammers create websites and apps that mimic real platforms, making it easy for unsuspecting users to fall for these traps. Types of fake wallets and exchanges include cloned wallet apps, fake apps that look like legitimate wallets, prompting users to enter their seed phrase. Phishing wallet extensions, browser extensions, claiming to offer wallet features but actually stealing login information. Unlicensed exchanges, sites that collect deposits but don't allow withdrawals. For example, a fake exchange might offer attractive trading pairs or low fees, but will restrict withdrawals once funds are deposited. Practical tip: download wallet apps only from official sources like the Google Play Store or Apple App Store. Before signing up with an exchange, check reviews and research its history to confirm its legitimacy. Chapter 7. Staying vigilant. Your best defense against scams. New scams emerge every day in the crypto world, which makes staying informed your best protection. Follow reliable news sources, connect with trusted communities, and learn from the experiences of others. The more informed you are, the better equipped you'll be to spot scams and secure your assets. Trusted sources for staying informed include crypto news outlets. Sites like CoinDesk and Cointelegraph often report on security updates and known scams. Community forums, Reddit's R, cryptocurrency, and Telegram groups are useful for real-time information. Security tools. Use tools like CoinMarketCaps or CoinGecko's token verifications to help identify legitimate assets. For example, many scammers promote new methods on platforms like Twitter. Staying engaged in the crypto community allows you to learn about potential threats quickly. Practical tip: set aside time to regularly review your security practices. Join reputable groups on Discord, Twitter, or Telegram, where you can receive alerts on new scams and security breaches. Conclusion: protecting yourself in the world of crypto. The fast-paced and decentralized nature of crypto brings both opportunity and risk. By understanding these common scams and taking proactive steps to secure your digital assets, you'll be able to navigate the crypto space safely. Vigilance is essential, and your awareness is your best defense against scams.